You've seen the headlines, haven't you? Real estate slowdown deepens. Housing market faces prolonged freeze. U.S. home sales hit lowest level since 1995. These national stories are everywhere, and in some parts of the country, the real estate market is slumping. But is that what's happening in Richmond? Let's find out. I'm Greg Somerville, a Richmond real estate agent. If the last few years have taught us anything, it's that you can't believe everything you hear in the news. Headlines about the real estate market remind me of that famous quote from Mark Twain: "The reports of my death are greatly exaggerated." The truth is, the real estate market is incredibly local. What's happening in one part of the country may not be what's happening in Richmond. Today we're going to look at 3 numbers that prove that Richmond's housing market is not crashing. If you have questions about any of this, my number's on the screen. I'd love to hear from you. And click the link in the description below if you'd like a free copy of my Richmond home buying guide. First, let's look at sales volume. Yes, the number of homes being sold is down from the frenzied pace we saw in 2021 and 2022. But that was an unprecedented time, fueled by artificially low interest rates that went below 3%. If you look at the most recent data, despite a sluggish spring market, sales volume is higher than it has been in the past 2 years. There were 4,326 homes sold across the Richmond region in Q2 of 2025, a 4.2% increase from last year. This isn't the sign of a crash. This is the sign of a market finding its new normal, even while interest rates remain relatively high. Next, let's talk about the elephant in the room. What's happening to home prices? If you live in Texas, those scary headlines may be hitting closer to home. The median sale price in Austin, Texas today is $56,000 lower than it was in 2022. In Richmond, though, home values are higher than ever before. The median sale price hit $425,000 this summer. It's currently $397,000, reflecting a typical dip during the summer months, but it's still 2% higher than it was last year at this time, and almost $50,000 more than it was 3 years ago. Historically, home values in the U.S. have gone up 3 to 5% each year. Residential real estate is one of the safest investments you can make, and Richmond's home prices have remained remarkably stable. We haven't seen the major drops that some national news outlets predicted. This stability is a key indicator of a healthy, resilient market. It shows that buyer demand is still strong and homeowners are not being forced to sell at a loss. Let's turn to a third key indicator of real estate health: inventory. In a collapsing market, you'd see a huge surge of homes for sale as distressed sellers rush to get out. If our economy spiraled into a recession and unemployment numbers rose from the current 4% up to, say, 10%, foreclosures would multiply and housing inventory would explode. During the pandemic, a frenzy of home buying drove inventory to record lows, but the tide is now rising. There are 12 states in the U.S. where inventory now exceeds pre-pandemic levels: Arizona, Colorado, Florida, Idaho, Hawaii, Nebraska, Oklahoma, Oregon, Tennessee, Texas, Utah, and Washington. Virginia has 27.5% more homes active on the market now than it did a year ago, but we're still 37% below the inventory levels that were more normal back in 2019. Inventory has risen significantly over the past year, and that's a good thing. We're moving from an extreme seller's market to a more balanced and healthy market. This gives buyers more options without creating a panic. This is good news for everyone involved. So what makes the Richmond real estate market so resilient? Why do home prices here continue to rise when they are stagnant or slumping in other parts of the country? Well, I think it comes down to a few key factors. Strong in-migration. People are still coming to Richmond. They're drawn to its unique blend of history and culture, natural beauty, and relative affordability compared to other East Coast cities. Limited new development. Unlike some parts of the country that have overbuilt, Richmond's new construction has been more gradual, maintaining a healthy balance between supply and demand. And then there's the lifestyle appeal. Richmond's convenient location, 2 hours from the beach, 2 hours from the mountains, 2 hours from DC, is a huge plus. And its booming food and art scene continues to attract new residents, which keeps demand for housing high. So what's the takeaway from these stats? If you're a buyer sitting on the sidelines hoping for a big crash before you make your move, you may be waiting waiting for something that's just not going to happen in Richmond. And if you're a seller here, you can be confident that you are in a stable, healthy market. The Richmond real estate story isn't about a crash. It's about resilience and the enduring appeal of a city that continues to grow and thrive. Well, I hope you found this helpful. If so, feel free to hit the like or subscribe. And if you have any follow-up questions or concerns about the Richmond market, text me. I'll do my best to get you the answers. Until next time, thanks for watching.